Hello, everyone. Welcome to week 3 of Investment Team. This week, we're going to be going over all of the basics of researching stocks. So first, let's go over how you make money from stocks and some other key investment terms. So in order to make money from stocks, one way in which you can make money is by purchasing a stock and then selling it later on after it has appreciated in value. And another way that you can make money from stocks is by receiving stock dividends. So a dividend is a portion of a company's earnings that is paid to shareholders. The dividend amount is determined by a company's board of directors every quarter, and it's not obligatory. This means that if the company is not doing so well, they can stop giving dividends to their shareholders. Dividends are given on a per share basis, which means that the more shares you own of a stock, the more money you will receive in the form of dividends. Dividends are made to attract investors, so companies with low growth are typically more likely to offer dividends to their shareholders. So here are some important key terms: portfolio, stock symbol, quote, sector, market order, and limit order. The first 4 key terms are relatively basic, so I won't go over them, but I want to elaborate on order types because you'll see them on the stock track simulator that we're using for the competition. So the first type is a market order, which executes your stock purchase as soon as possible. And the other type is a limit order, which executes your stock purchase only at or under a certain price. So when you're ordering your stocks, you can decide between these 2 order types. Some more advanced key terms include volatility, liquidity, trading volume, capitalization, forex, and yield. I won't go into detail about these terms, but you'll probably become more familiar with them as you do more research and analysis on stocks. So speaking of research, that is the first step for when you're buying stocks. So when starting your research, you first narrow your focus down to the approved stock list, which is the list of stocks for the KWH's competition. For the competition, you have to have at least as many sectors as you do team members. So make sure that you are doing in-depth research on your specific sector, looking at various indicators. When you buy stocks from your sector, you definitely want to compare them with each other and to the industry indicators in order to ensure an accurate analysis. You don't want to compare stocks from different sectors because the indicators vary for different industries. For individual stocks, make sure to learn about the company itself, their financials, and also their news. So you want to make sure to look into their past trends as well in their stock price in order to look for seasonal patterns. And lastly, you can also do some analysis on different stocks, which we will get into very soon. So here are some different researching resources that you can use. So I found these resources to be the most helpful and commonly used by industry professionals, but there are definitely more websites available for you to look at. So let's start going over different types of analysis. So first, let's look at financial ratios, which is a common qualitative analysis method for buying stocks. This is a list of 4 pretty basic financial ratios that will be pretty helpful for you. First is earnings per share, which measures net income earned on each share of a company's stock. The higher earnings per share is, the more return you'll get from buying a stock. Another important financial ratio is price to earnings ratio, which measures how well a stock's price is doing relative to the company's earnings. The price to earnings ratio is an indicator of whether a stock is undervalued or overvalued, and you definitely do not want to buy a stock while it's overvalued. Next is return on equity, which measures profitability in relation to equity. The higher this ratio is, the better the company is at generating profits using their assets. Lastly is the debt to equity ratio, which measures liabilities of the company relative to its assets. The debt to equity ratio is a strong indicator of how risky it is to invest in a company. So next we'll be looking at quantitative analysis, which is your other option for researching stocks. And this is more specifically looking at SWOT and Porter's 5 forces. So first, let's talk about SWOT analysis, which is when you evaluate the strengths, weaknesses, opportunities, and threats for individual companies. SWOT is really easy to do and somewhat effective, but it doesn't really go in depth. However, it's definitely a good tool to use when deciding which stocks to buy. And when you start writing your papers, you can refer to different aspects of SWOT analysis that you did throughout the competition season. So applying the SWOT analysis to Apple, you can see that Apple has well-designed products and loyal customers, but their products are not used often by business professionals. However, this weakness is an opportunity for Apple to expand into the growing business market. Apple is also currently facing the threat of the growing use of Android for smartphones and emerging competitors for almost all of their products. So that's pretty much it for the SWOT analysis. And the other type of quantitative analysis is Porter's 5 forces, which is a tool that determines an entire market's competitive intensity rather than a specific firm. And Porter's 5 forces is also can also indicate the cause of an industry's profitability. So Porter's is very closely tied to long-term profit potential. So for this method of analysis, you have to analyze 5 different components and then put them together to create a big picture of the industry and the market. And I would definitely recommend for you to do a Porter's 5 forces analysis on all of the sectors that you're planning on buying during the competition. So the first component is the rivalry amongst existing competitors, which includes looking at the number of competitors, size of competitors, industry growth, product differentiation, and exit barriers of the industry. The second component is looking at the threat of new entrants, which puts pressure on price, costs, investments of existing firms. The significance of this threat depends on barriers of entry, such as cumulative experience, capital requirements, government policies, and so on. The third component is a threat of substitutes. A substitute is a good that fulfills the same need as the original product, and therefore it draws profits from the original. The significance of this threat depends on the number of substitutes, the number of buyers willing to substitute, and the quality versus price of the available substitutes. Another component of Porter's is the bargaining power of suppliers, which measures how much power a supplier has over costs of a firm. This bargaining power depends on the number of suppliers, supplier concentration, the cost of switching suppliers, availability of substitutes, strength of previously established distribution channels, and the uniqueness of a supplier's product. The bargaining power that a supplier has can significantly lower an industry's overall profitability. For example, producers of certain computer chips have more bargaining power than corn farmers because the product that they're supplying is very unique and not easily replaced. The last component is bargaining power of buyers, which measures how much influence buyers have on price and cost. Consumers have high buying power when there are few buyers of a product, and when there are many alternatives, and also when sellers' products are very similar to each other. So those are the main 3 methods of analysis. And now when you're doing research on stocks, you can use those 3 different types of analysis to further your research on stocks and make your arguments stronger in your papers for why you're buying certain stocks. So that's pretty much it for today's video. And the link to presentation slides are in the description below, as well as the other resources that were mentioned in this video. So thank you guys for listening, and that's it.